Hello, and thank you for joining us today. My name is Burke Purcell. I am the CEO and founder of LoanBud, and we are going to talk about SBA financing. LoanBud and Transworld Business Advisors have a very strong partnership together, and at LoanBud, we help Transworld brokers get access to SBA financing. So, a bit of background about LoanBud. We began as a division of a public bank and a top 10 national SBA lender. At the end of 22, we parted ways with that bank and made the decision to become an independent marketplace to be able to better represent our customers and help our partners. And so today we work with over 50 SBA lenders on our platform. We are the only marketplace in the United States that is fully dedicated to SBA lending. So a bit of background on myself. Again, my name is Burke Purcell. I am the founder and CEO of LoanBud. I have over 2 decades of experience in lending. I have grown and scaled multiple operations and sales teams. I've been inside of many banks, whether it's regional banks or national banks, and I've seen lending and how it works. I understand how credit committees work. I understand the mentality of bankers, and I really believe in the entrepreneurial community. I'm a huge advocate for the self-employed. Over the last 10 years, I have been purely serving the needs of the self-employed community. And especially with small businesses, there really is not a ton of knowledge and education out there. And particularly with SBA, it's just not an easy process. And then there's a lack of knowledge and understanding. So I really believe in empowering entrepreneurs and helping them access SBA financing. And when I was a part of really multiple banks, but especially the most recent one, I just noticed a tremendous amount of inefficiencies. There were folks that, were keeping track of deals on Excel spreadsheets and using PDFs and emailing documents. And really, it just seemed like a pretty unorganized process. And then also what I found is that we were turning away some otherwise really well qualified buyers. And that was part of the reason for starting a marketplace, is giving entrepreneurs access to the SBA, not just through the lens of one lender, but through the lens of dozens of lenders. So some background first on SBA lending. So the first thing you need to understand is the SBA does not lend out the money. So the SBA is a government agency. They let it up to the 2,000 plus SBA approved lenders to be able to make their own credit decisions and set their own credit policies. So each and every one of the approved SBA lenders has its own very unique set of credit criteria. And this can really range based on the collateral requirements of the lender, meaning whether or not they want the buyer to own real estate. It can vary based on the minimum FICO score, the debt service coverage ratios. So looking at the historical cash flow of the business that's being sold. Some lenders may want to see just the last filed tax return to show enough debt service coverage ratio. And other lenders might want to see 2 or even 3 years. So that really can vary tremendously based on lenders. The industries that lenders will lend on can also vary. So the approved NAICS codes or industries are not going to always be the same for each and every lender. The equity injection requirements for the buyers will also vary based on the lender. And then finally, the internal approval process. So the way that lenders go about approving loans can be quite different from one lender to another. An example there is whether or not there is a credit committee that needs to vote on approving a loan over a certain size, or the way that the frontline sales folks are able to issue an initial term sheet or letter of intent can vary, whether or not it actually goes to a credit department. So we'll talk a bit about a typical SBA deal structure. And I will say that this is what most lenders will want to see. On a high level, what the SBA requires is at least a 10% equity injection from usually the buyer. We'll talk about in a moment the cases in which equity can come from the seller, but usually it's a 10% equity injection from the buyer, and then the SBA lender can finance the additional 90%. So what a lot of lenders will like to see is the seller also holding some sort of note, because what that will do is really ensure that the seller has a bit of skin in the game, and that promotes a healthy transfer of ownership from the old ownership to the new. So on the left here, we talk about the equity injection for the buyer. There's going to be a minimum 10% of the total project cost will need to come from the buyer. Again, there's some exceptions there where we can go as low as 5%. We'll talk about that in a moment. And then we have the SBA 7A loan. That's going to be up to 90%, but usually lenders would love to see 80%. And what we can finance with that 7A loan is going to be things like the actual business being sold. We refer to that as goodwill. We can include working capital, closing costs, and fees. We can also include things like owner-occupied commercial real estate that the business will occupy, equipment, inventory, supplies, really any eligible business expense that is going to be needed to help this business transfer ownership cleanly, we can include in the SBA 7A loan. It's one of the wonderful things about the 7A program. And then a seller note is something that we do see quite a bit. It's not a requirement, but oftentimes we do see these as part of the structure. And the seller note can range. It could be 5%, 10%, 15%. There's really no cap on the amount of the seller note. It can help bridge valuation gaps. So with an SBA loan, we are required to order a business valuation. And that valuation number needs to be at least as much as the SBA loan. And sometimes it comes in a little bit less than the proposed SBA loan. In those instances, lowering the SBA loan amount and having the seller hold a bit of a note, or maybe the buyer coming in with more cash, are typically the best paths to move forward. And the seller note would be sometimes can be counted as equity. This is the exception that I spoke about earlier. So the buyer is able to come in with a minimum of 5% cash injection, and then the seller can hold a note on full standby throughout the entire life of the SBA loan. So what that means is the buyer is not permitted to make any payments at all to the seller on that note during the entire course of the SBA loan, whether that's 10 years or 25 years, depending on the deal structure. Requirements is that the SBA lender must take a lien on all available collateral, assuming that the loan amount is greater than $350,000, which most change of ownership transactions will be. But a lack of collateral is not necessarily a deal killer as long as the cash flow of the business is strong. So equity injection options beyond cash. A lot of times buyers think they have to have an all cash solution, but brokers are able to bring creative solutions. So we talked about the seller note on standby. So a 5 and 5 structure 5% seller note on full standby throughout the entire life of the loan. And what happens if a note is on standby is that there will still be interest that will, as opposed to a payment being made, it will be accrued. So that interest will accrue on top of the initial note amount. So hypothetically speaking, if the seller held a note for $100,000 and there's 8% interest that is negotiated between the buyer and the seller, then each year there would be more interest that would get tacked on to that $100,000 initial seller note. Buyers are able to tap into equity in their homes. So we are able to help arrange home equity lines of credit for prospective buyers. They can access the capital that is within their property to be able to come to closing with the required amount of cash. There are some caveats there. The buyer would need to have some sort of income outside of just the salary from the new business to be able to repay that equity loan. But it is certainly possible. We do quite a bit of home equity lines of credit. Gifts are eligible. So a gift from really any sort of family member, whether that's direct family or a cousin, is absolutely acceptable. A retirement using a ROBS, so some kind of rollover, is an eligible use of an equity injection. And then lastly, outside investors. So equity investors who are willing to put up some of the cash in exchange for an ownership interest in the business. Just note that any buyers who on the cap table have at least 20% ownership in the business must be guarantors on the loans. And usually equity investors are not interested in putting up their houses as collateral or being full guarantors. So normally they would take less than 20% in the business. So collateral and SBA acquisitions, the SBA does require all collateral is going to be pledged if it's available and that there are personal guarantees. The real estate collateral is going to apply for any SBA loan amount greater than $350,000. So if your loan amount, if it's a smaller transaction, the loan amount's under $350K, then the lender is not required to, although they can request it, they're not required to by the SBA take real estate as collateral. But otherwise, if the buyer does own real estate, Texas is one exception. If a buyer has a primary residence in Texas, that cannot be taken as collateral. That's a state rule. But outside of Texas, if a buyer owns real estate collateral, the loan amount is greater than $350,000, and there is at least 25% equity available in that collateral, then the lender is required by SBA rules to put a lien on that collateral. So the cash flow is really going to be always the most important driver in getting SBA loans approved. So we are going to look at collateral. It certainly strengthens the deal, but it's not going to usually be a deal killer. It's just something that can strengthen the deal. So sometimes what we need to do is bridge the buyer-seller gap. So we often here at LoanBud, we pre-qualify a lot of listings for SBA financing. So we'll do this before the listings hit the open market, or even when it's on the market, we can still pre-qualify a listing. It attracts more buyers and really more qualified people that in many cases, they want to know that someone else has actually looked at the deal and the cash flow is supported. And sometimes when we pre-qualify deals, we might not be able to get to an SBA loan amount equal to 90% of the asking price. So what we do as on the SBA side when we evaluate lending options is we're going to see how much of a loan can this business support. It doesn't really matter to us what the asking price is. It just matters how much of a loan the business that's being sold is able to support. And we do that by looking at what we call a debt service coverage ratio. So what we can do sometimes is we can use seller notes to be able to bridge the gap when the asking price is maybe a bit higher than what an SBA loan could be on that particular acquisition. When it comes to seller notes, this is a really important topic for all brokers to understand. There are multiple ways that seller notes can be structured. The first is that the note is repayable on day one. So repayable notes on day one are absolutely allowable. Just note that the SBA lender is going to need to take whatever the payment is on that note into account when doing the cash flow analysis. And a lot of times sellers are not necessarily willing to wait 10 years to get paid back. So they might not have as long of an amortization schedule as an SBA loan would. And in those cases, sometimes having a seller note with a repayment on day one is just not possible if the seller wants to hold a note of $500,000 and get repaid over 24 months. That's going to be a really, really high payment that will be tough for that business to support. And so if the business cannot support repayment of a seller note on day one, then we will structure the deal so that the seller note is on standby. And if the seller note is not being used as equity, meaning the buyer is coming in with at least 10% cash, then we can put the seller note on standby for 36 months. And if it's on standby for 36 months, the lender is not required to use any sort of payment on a seller note in the cash flow of the deal. So that same scenario where there's a $500,000 seller note, if there are no payments made for 36 months and interest accrues during that time, then we do not have to take that into account with the cash flow analysis. So that is a very common way that we will structure deals, is we'll have seller notes on a 3-year standby. So what are the broker's roles in SBA deals? Well, before LOI, you want to start by confirming that the buyer has the required equity injection. This is something that LoanBud does, is we will pre-screen buyers to make sure that they are fit to be able to purchase the business that is for sale. And what are we looking for with buyer pre-qualification? Well, the first thing is, do they have an acceptable credit score? Typically, that's a 650 or higher. The second thing is, do they have relevant experience that is relatable to the target acquisition opportunity? And the third is, do they have the money to be able to come in? So do they have at least 10% come in, plus have a reasonable cushion after closing for some cash? If the buyer is going to be raising outside equity, I really want to know, is that already committed? Do you have committed outside equity investors that are dedicated to coming in with cash for the deal? I'd love to see a letter of commitment from an equity investor so that we're all not wasting our time. And then we find out at the 25th hour that the equity injection is no longer available because the investor is no longer interested. Getting the listing SBA pre-qualified up front is a great idea. It's an excellent way to attract more buyers, to get your sellers top asking price, and ultimately for your deals to trade faster. Because if we have a deal SBA pre-qualified, that means that we have all of the financials on hand. That is usually one of the biggest struggles with particularly smaller businesses that are listed for sale, is that the books and records might not be up to date. And for us to pre-qualify something, we need to have financials, including year-to-date profit and loss statements and balance sheets, validated before we can issue that pre-qualification letter. And then managing expectations for the sellers, I think, is a really key role for brokers. Number one, if there's SBA financing involved, explain to your sellers that there is going to be some work required from their side. There will be underwriting questions. There will be document requests. We're going to have to get updated documents as the transaction progresses. So the more prepared they can be for that, usually the better the transactions are going to progress. But we need cooperation. If there is no cooperation from either party, whether it's the seller or the buyer, then that's when deals end up getting delayed. With buyers and sellers that are all over the document requests, we can usually fly through transactions in less than 60 days, sometimes 45 days, but we need everyone's involvement. And then how LoanBud steps in is that we pre-qualify all sides of the transaction. We pre-screen all the buyers, we pre-qualify the listings, and we ultimately make a match of two vetted parties. Here's a case study of a typical acquisition. Let's say you've got a $2 million deal, and we look at what we call total project costs. So it might be a 1.8 acquisition with $100,000 in closing costs and $100,000 in working capital that's built into the deal. So you have a total project cost of $2 million. We would love to structure it where the buyer comes in with 10%, the seller holds a note of 10%, and the SBA loan is made for 80%. But again, if the cash flow is supported, we can absolutely do just a 10% equity injection and the remaining 90% financed by the SBA. So in review, SBA acquisitions will always need a 10% equity injection. That could either come all from the buyer, or it could be 5% equity injection from the buyer and a 5% seller note on standby for the entire life of the SBA loan. Seller notes and creative equity sources can really help to bridge the gaps. And then brokers who understand basic deal structure with SBA loans are ultimately going to move deals faster. And LoanBud is here as a partner with Transworld to be able to help pre-qualify deals, accelerate your closings, and ultimately help you get more deals done. So the LoanBud way, we talked earlier about how many lenders have a tremendous amount of credit overlays. And at LoanBud, we really don't have any of those. So we have strategic partnerships in place with over 50 different lending partners. So our approach is very simple. We do not need real estate collateral. We will have to take it if it's available, but it's not going to kill a deal. We just want to see a personal FICO score of a 650 or greater. And then as far as the cash flow is concerned, we only need to see the most recent filed tax return plus the year-to-date financials show at least a 1.25 debt service coverage ratio. We do all of those calculations in-house, and there's no credit committee. So as long as it passes all of these criteria up to $5 million, we have a single pen authority with our lender to be able to get these deals approved. This provides to you not only speed and execution, but certainty of close. And then lastly, at LoanBud, we are able to offer pari passu loans. And what that means is we can provide an SBA 7A loan up to the maximum SBA threshold, which is $5 million. And then we can couple that with a conventional loan that closes simultaneously up to an additional $3 million. So this can really help with some of the lower middle market deals, transactions with enterprise values and the 10, maybe even $12 million range are great for this because the seller can hold a little note, the buyer can come in with just maybe 10% cash, and we're able to really get some larger transactions structured, and we do quite a bit of pari passu lending. LoanBud's process for acquisitions, the way we're able to get deals done in 45 days or less, is that we're always going to run parallel tracks. And this is different than how many lenders operate. So when we're in the pre-qualification stage and we have an LOI, we are already going to start working on the documents required to submit the loan into underwriting. Once we get the loan submitted to underwriting, we are then going to start working on the documents needed for closing. And so we're always kind of one step ahead. It allows us to keep the ball rolling and ultimately get deals closed a lot faster than some other institutions. And that's all we have for today. I hope that you found this information to be helpful. If you ever need anything whatsoever, please feel free to reach out to us directly at LoanBud, and we look forward to helping you with your SBA loans.